What is going on, everybody? My name is Asif with AK Real Estate, and here I'm joined alongside Miami real estate agent, property manager with Confident Property Management, owner of the Vargas team, and a personal investor, Steven Vargas.
What's up, man?
Sir, I'm super excited to do this. How are you?
Me too. Thank you for having me in my own podcast room.
Let's do it.
Appreciate it.
First, we're going to get into who I am. I met Steven around 2 years ago, and it was at a time in my financing journey where I was looking to get involved in real estate investment. I've been to Miami a few times and always studied that this was a market I wanted to be a part of.
Right.
I was here a few years ago, even before the time I was investing, and saw the growth and saw this is a place where I want to invest. Obviously, I'm from Canada, and being a part of investing abroad was something that super intrigued me. And that's when I stumbled upon Steven's YouTube channel, right? So he was somebody that I've been working in the real estate industry for 4 or 5 years now. Mm-hmm. And seeing Steven's journey in personal investing and how he's able to help investors like myself was a huge thing that I wanted to learn from him more. And yeah, that's kind of how we got connected and where we came from. So I just wanted to talk about building relationships. Let's talk about building relationships before you even get started in investing, whether it's in your city or abroad like myself. Building a relationship with somebody who knows what they're doing, someone who's been a part of it, someone has helped others, and someone has done it themselves, right? So the video was you talking about how your investing situation was going, and I learned a lot from it, how we were able to underwrite properties, how we were able to search for properties, and yeah, just if you want to kind of elaborate on like how we kind of connected from
Yeah. Sure. I think so. I do a lot of YouTube video stuff, mostly here in Miami for other investors, buyers, and sellers, just kind of general information. I do have a forte in investing only because I, as a real estate agent, invest, and usually primarily through multifamily properties. Although, we do have some short-term rental properties as well that we do. But primarily my forte is multifamily long-term rentals, and it's kind of what we specialize in. I feel like any investor worth their salt probably has a specialty. And if they try to do too much in two different areas, not that it's not possible, but I just haven't seen anybody good at a lot of things. Usually they're like experts at one thing. And I think throughout the series of videos that I was creating to attract, obviously it worked, attract a potential investor or a already seasoned investor, led you, if I'm not mistaken, you saw one of my videos, you reached out to me, and then we kind of just connected that you were interested in buying real estate in Miami, which is kind of interesting. You're in real estate in Canada. Right. So can I ask you, why did you not first think of buying real estate in Canada?
Right.
Because for me in Miami, I would want to buy real estate in Miami. I wouldn't think about somewhere. So why Miami and why not Canada?
So at the time when I was looking to invest, it was around the years of 2021, 2022. And first of all, I would say it's the cost of entry. First of all, the cost of entry to invest in a potential cash flowing property in Toronto was...
So it's more expensive there than Miami.
Yeah, absolutely.
Oh, wow. That's interesting.
Like, talking about cash flowing, like Toronto is extremely hard to cash flow properties, right? We could talk about the mortgage interest rates. We could talk about the cost of entry of the properties and the rental market. Miami at the time, when I first looked into it, was one of the most thriving markets. I say 2022, 2021 is when I really started to think to myself like, hey, investing is what I wanted to do. Again, Miami is this place that I do see myself in the future being a part of.
Like living here?
Yeah.
Oh, okay. I got it.
That is the goal. Like,
so you want to establish roots here?
Yeah,
okay.
Absolutely. Right. So yeah, those, I would say the two things, the start of entry and the fact that like my main thing when I'm purchasing a property was obviously the cash flow and the appreciation, right? And Toronto, the appreciation has been there, but a lot of people, especially in this year, are losing money with a lot of properties. Miami has properties that are like that, or even South Florida in general has properties that are like that. But Toronto, I'm sure investors from Toronto could speak on this as well. It's hard to cash flow there compared to here.
Yeah, we had that problem too in Miami. I think that a lot of people get into buying real estate because their aunt or uncle or their mom or somebody said, there's either two schools of thought, like you should buy real estate or don't buy real estate. I got burned from it, right? Yeah. But both, I think, come from a place of not a lot of information. Like it's just kind of like I heard or I saw or I just didn't do it right. And I heard that too, man. Investing, when I started investing in 2018, I also heard people were like, don't buy real estate. You're going to get burned, which is funny because it always would come from people who didn't own real estate.
Yeah, exactly.
And so I always was just like, I have this thing. It's like, if you got what I want, then I'll listen to you. But if you don't, then it's just
Speak
noise.
From experience.
Yeah. Well, I know that you had mentioned to me that, so you made a video, right, about your experience. Yeah. And And actually, I think some people didn't believe it to be true, or like some of the things. There's a lot of limiting beliefs, right? Is that true? What did people not think that was true about your journey? Because I mean, I could vouch for, I was part of it, right? And I still am, right? So what did people have a hard time believing?
I think a lot of Canadians, especially I can speak from a lot because I have a lot of Canadian audience that probably work with Canadian people, but I would say the limiting belief would be like the fact of that it's much harder than it thinks, right? Like even I had that as a belief. Like when I first thought about like, hey, I would like to invest in Florida, I thought it was so much background to it, right? But again, working with someone like Steven who's worked with international buyers before, he showed me the simplicity of it, and it's not as complex as you may think. Obviously, we're going to dive into things like financing. We're going to talk about things like taxes or whatever the case may be. But yeah, I say the limiting beliefs is that it's that much harder to get into. Like they think that, like I even had people thinking that Canadians couldn't invest in Florida. Yeah, I think the limiting belief was that it was so complex to buy a property or sell a property. Obviously, there's different kind of taxes. So when you're selling a property as a international owner, who's going to run property, who's going to manage your property, and that's why, like again, where you came in and were able to simplify the entire process out for me. So yeah, I guess that would be the limiting belief.
So let's talk a little bit about that, because I get this a lot too. Because primarily, I think where people get caught up is in how is it possible to buy real estate and how is it possible to cash flow, because it is very difficult, if not nearly impossible, to cash flow in Miami. Right. And I think that it's because the way that my team and I approach real estate is that we buy through creative financing. Okay. So yes, it is true that if you're from an international buyer, that buying and getting financing is a lot more difficult, especially now with interest rates being tightened up and additional regulations and all that, which is true. But let's take that concept and let's think outside of the box, right? Which is basically like, okay, if buying with traditional financing is complicated, what if we didn't buy with traditional financing? What if we just went outside and bought with creative financing? And so then, therefore, we make the rules. And so if people are asking, what's creative financing? Creative financing is anything that's not traditional through a specific bank. In our case, it's seller financing. I set out to find sellers that are interested in providing you the loan. Right. They would act like the bank. Right. And so I would tell sellers, I'm like, look, I have a buyer who's interested in putting typically 10 to 30% down. The more you put down, obviously, the easier it is to get sellers to agree to it, but typically 10 to 30. And they would pay you the monthly interest payments instead of paying the bank. Right. And so some people would ask, well, Steven, why would somebody want to do that? Right. And they're right. Most people don't want to do that. So it's a very painstaking process in finding a seller who is probably at retirement age, who probably doesn't want the money to go invest in something else. They actually like the monthly cash flow, but they hate being a landlord. Yeah. That's the perfect combination where you're like, dude, I'll give you the monthly cash flow. I'll give you a deposit so you have some money cash on hand. We'll pay you monthly. You don't have to worry about the tenants. And if we don't pay you, you keep the money and you get the property back. Absolutely. So for a select few of people, that is very enticing. Right. And for an international buyer, not having to go through the lender points, the credit check. And I've done 6 seller financing deals personally. I've done like 50 with clients in general, but I've done like 6 personally from my investments, and not once has the seller ever asked me for my credit score or for really any of my financial documents. They're like, hey, do you have the 30%? I'm like, yeah. I'm like, great. Because the asset is the collateral. So they're like, oh, I know how good my property is. Because remember, they're giving you, they're lending based off of their property. So they're like, well, my property cash flow, so he's going to pay me back. Yeah, of course. Because he's going to pay me back with the money that the property produces. And my property is producing money. Right. So I think that's the first limiting belief, is like if people are like, oh, you can't get financing, it's very difficult. Yes, traditionally, very difficult, but we're not getting it traditionally, right?
Of course. Like I think that's when we first got in contact, we had first said like, hey, like you can walk into any Canadian bank, financial institution and get US financing, right? That's not a problem. But a lot of banks will have higher rates than if you were to buy in Ontario or whatever province you may be in Canada. So yeah, that is another thing that's going to affect your cash flow and the money that you're going to have to spend and your affordability at the end of the day. At the time, like I wasn't, my credit score was not where I wanted it to be or where it could be, right? For when you think about affordability of a property.
Yeah, you're 19, man. I don't think my credit was good enough. The fact that you bought your first property at 19 is commendable first. Yeah, of course. That's crazy. So, take my hat off to you because I definitely was not thinking about buying property when I was 19.
Yeah, of course. I mean, that was kind of my main concern is like the financing and affordability, and going through creative financing was something different, providing a different alternative. Again, some people's credit score might not be right. Some people's affordability based on their income might not be right. And that's another route for Canadians to go through. Not only Canadians, obviously this can be done for people across different states, but another option for Canadians to go through if they're trying to get into a Florida market.
Yeah,
So,
yeah, true. And I think that when you are buying, so typically when you and I are looking for your property is cash flowing, is still cash flowing. And you were talking about how some investors in Canada, and I can also say that some investors here in Miami are not cash flowing. Right. I don't know why. I don't know what the reason is in Canada, but for Miami, I can speak that interest rates, insurance, and property taxes have basically killed any cash flow. What I tell people is that there was people who were buying in 2021, they were making like 2 to 3%. And I was like, they're going to go underwater. The second the maintenance or the second the interest or rather the insurance or the property taxes go up, their cash flowing property is going to be a liability. Right. And for some people, I've realized that people either buy for appreciation or they buy for cash flow. Mm-hmm. And typically everyone buys for appreciation because ultimately our exit strategy that you and I discuss is like, okay, the property's going to pay you every single month. Right. And basically it's going to pay you to wait. Right. And it's going to pay you to be patient, because if you're making money from a property, you could be patient. If you're losing money and you're spending money, you're like, Steven, I need to get out of this.
Yeah, of course, yeah.
And that impatient, like when you're impatient, it causes you to sell at a bad time. Like right now, if you needed to sell, it would be tough. You'd be pretty screwed. The cash flow is the patience. The appreciation is the reward. Right. And then if you play your cards right, once you have the appreciation, you roll that into another property and just rinse and repeat. Because now you can buy another property with the same money that you spent on the first one. Yeah.
Like, I mean, some people's goals with investing, like some people are okay with taking a loss, right?
Yeah.
Some people are okay with taking loss. Some people are only like there's different kind of investors, like you talk about, people who are only looking at properties that are just based on appreciation. Some people are only looking for, hey, this is cash flow 6+% or whatever the case may be in whatever market, right? So yeah, that's kind of the main thing what we went through in going through financing. Still thinking on the topic of financing, we kind of went through that. And again, we talked about being able to negotiate with sellers, right? We negotiate interest rates, loan terms. Like that's another part of creative financing that, like, hey, if you're not trying to lock down a 25-year or whatever kind of year mortgage, that's another thing that you can go through for creative financing as well, and just another way for Canadians to get involved. Yeah.
Oh, you bought in Miami Beach, which is an A+ market. Those markets typically are going to give you a 2 to 3% return if you're lucky. And like you were saying, most people won't even buy with the return. They're completely fine with buying an A+ market and making no money.
Yeah, for sure.
Because they know that, okay, I spend $500 a month keeping this property afloat. It's like $6,000 a year, but I know that in 5 years it's going to be worth like $250,000 more. So I'd easily spend the $6,000-$7,000 a year keeping it afloat. To be in it for $30,000 or whatever it is, to sell it for $150 more, it still makes sense for me. At such a young age, you probably don't want to stomach a $500 loss. Absolutely. So we need to do the same thing, but make you some money. So whenever you're looking at investing, guys, especially if you're looking for multifamily, but just rental real estate, you have to take into account the monthly cash flow that the property is going to be making, what that is annually. You need to be taking into account what that property is going to appreciate annually. They're two separate numbers. And then you need to be taking into account tax, your tax implications on how you can lower your tax burden. Yeah. And that's going to increase it more. So the internal rate of return, as we like to call it in the industry, which is just a fancy way of saying like all combined, how much am I going to be making? Whenever I speak to an investor, it's kind of hard for them to gauge that until you really break it down, if that makes sense.
Like we talked about so many things about calculating cash flow, calculating returns, whatever the case is. And one of the main things that got us connected is the way, like, again, I was a first time investor, right? Like probably so many people are watching, or so many people want to get into doing that. The way Steven was able to show me how to underwrite almost, right? Like every property that we went to was very different. We did creative financing almost from the jump, right? And we had to underwrite multiple properties before we got into
We sent a ton of offers, I think. I think the story that maybe you don't tell and maybe people don't know is like, it was like 15 offers before we got one that was like good.
Yeah, for sure.
And then, so it's hard. It's a numbers game. It's a lot of underwriting. But yeah, for sure. That's one way.
Yeah. Like having somebody that's going to work with you and take the time to underwrite every property and hit your goals. Again, if I told him, hey, my goal was like, I don't really care about cash flow. I just want to appreciate. He'll just look for a property in X, Y, and Z market,
Right.
whatever the case may be. But yeah, having someone like if your goal, like probably many, is to cash flow property, having somebody that you can work to that knows the market, especially as Canadian working in, it doesn't have to be Miami specific. It could be Orlando, Tampa, wherever the case, wherever you want to look into. Having someone that's done underwritings themselves and know how to send offers for the creative financing is important, because creative financing is out there, but not everyone knows. Not every agent knows how to do it, right? So
Yeah,
or has
very
experience,
very
knows how to
few
do it.
people know how to do creative financing, and even fewer have ever done it. So it's a nice fancy, term, sizzle term that people on the internet like to use with sub two and
Yeah.
seller financing and all these crazy things. But I don't think I've ever met somebody who's ever done it besides me.
Right.
And so, not to say that it can't be done, but I want to go back to something you alluded to at the beginning, like when you were saying like it doesn't have to be complicated and it's pretty simple. Yes and no. It's simple in the fact that I've learned this and have distilled it in a way that I can make you understand it. What I'm trying to get at is the decade it's taken me to learn this. It makes it look simple, right?
Sure. Yeah.
But otherwise, like you'd have to know how to underwrite, how to do cap rates, how to do seller financing, how to like trigger, how to do an operating agreement, how to do all these things to just put the deal together, and then how to negotiate, how to convince people that this seller financing deal is better than just waiting to sell the property, right? But yeah, I think you're absolutely right. I think on your side, you need somebody who knows how to find the deal, underwrite the deal, negotiate the deal. And then on my side, I need somebody who's open-minded to say, Steven, I know enough to know that you know what you're doing, right? Sure. And then go ahead and do it. And these are my objectives. As long as you hit them, we're good. Yeah, for sure. So I think that's what's important, man. Just let the experts kind of do what they do.
Yeah, as much as even before we got connected, I did my own study, I did my own research, looking at listings, whatever the case may be. But having someone who specifically knows the market, knows what they're doing, has done it before, not only for their clients but for themselves as well. Like we talked about it earlier. Like if we talk about investing as a whole, like working with an agent who's an investor, like I alluded to earlier, investor knows how to do these kind of things. So yeah, that's kind of where we kind of started off on building that relationship and how we kind of went through that.
Yeah, I think that's funny because we did kind of chuckle at it earlier, which is a true statement, guys. If you're looking for somebody, whether you use me or not is irrelevant. But I would think, at least my logic points, like, hey, if I'm using a real estate agent who's going to sell me an investment, I would first ask them, do they have any investments, right? Because if they're selling you, and we were laughing about this because most realtors will be like, yeah, this is a great investment. And then you're like, great, so you have some of these investments. They're like, absolutely not. And so it's like, well, if it's such a great investment, why aren't you investing? And sure. I'm one of the rare real estate agents that I love selling real estate, but I actually want to be a full-time investor. Yeah, absolutely. Not that this is a means to an end, because I think I'll always have clients that I'm going to help. But in a way, it's just kind of like the goal for me is to continue to invest in properties every single year that can yield a return that will allow me to rely less and less and less on real estate and work real estate as a luxury real estate agent because I want to, not because I need to.
Have to, absolutely.
Yeah. So that's kind of I'm just transparent on that.
Yeah. I would say the next thing after we talked about financing, how you can get into, how we can build a relationship with somebody that knows what they're doing.
Right.
I would say the next thing is a lot of questions that I get is almost the next step of the property, which is, hey, I had someone that I work with. He's great with underwriting. He helped me find a property. We came to an agreement, whatever the case may be. Another thing that a lot of people I see in Canada worry about is being away from your property, right? And this doesn't have to be Canadian. This could be out of state, across the country, California, wherever the case may be, right? And that's where we talk about property management, right? Why that's so important, right? Being away from your property seems like so much stress, so much like, hey, I got to communicate with the tenants. I got to worry about cleaning. I got to worry about turnover. I got to worry about whatever the case may be, right? Like if you have, I'm sure there's probably Canadians who have Airbnb units, right? If you have a property manager who's taking care of your turnover rate, there's no way you can manage an Airbnb out of state, right? So you need someone that's there to do it. Whether it's Airbnb or whether it's a long-term rental, having somebody there that's going to be able to manage your property, and that's where we get into confident property management.
Yeah, shameless plug. So what's the question? Why you should have a property manager? Is that kind of the question?
I would say like why would it be important? And what what a property manager can provide you?
Time, really. Like if as an owner of a property management company, Confidant Property Management, shameless plug. The idea there, and the name of Confidant is to be your trusted confidant, right? Like you entrust us your property, and we ensure that your property performs to the highest and best ability that your property can perform at. Now, is property management something that you could do? Absolutely. There's people who self-manage. I find it hilarious, people who self-manage, because I don't even self-manage my own properties. I give my properties to my own company, and my team manages it for me, because I value my time more than I value the money, the 10% that it costs to have somebody manage my property. Why you should have a property manager, and even if you don't have a property manager, if you underwrite a property, and I find this funny, if you underwrite a property and you take out the property management fee to make the deal look more attractive,
it's going to lose you money.
It's going to lose you money because you are still spending money, even if it's your own time.
Yeah, for sure.
You have to factor in, if you spend 5, 7, 8, 10 hours a month managing your property, right? Your hour costs something.
Yeah, of course.
So even if you take off the 10% off the spreadsheet to make the deal, make it work, and you're like, oh, this went from non-working deal to now it's a working deal, it's still a non-working deal. Because if it doesn't make sense with the property management fee, even if you're the property manager, then it's a bad deal. And I told you that from the beginning. I'm like, listen, if you manage your property, keep that fee in there, because in the spreadsheet, if we find a property that works with that fee, that means great. If you manage it yourself, it's all gravy. And if you don't, you're still cash flowing.
Yeah, for sure.
But don't put yourself in a position where you're like, I have to manage this property in order for it to turn a profit. That's the worst thing that you can do. But the majority of our clients are doctors, attorneys, entrepreneurs. They're like high earners, right?
For sure.
So they value their time.
Money, right?
Yeah,
of course.
So telling them 10%.
You're like,
I always find it funny. My high net worth clients, usually you're like, hey, I need this wire. They'll send you $50,000 without even asking a question. And then someone who's like, just getting started, they're like, so what is this $25 fee charge again? And so like they'll haggle you on everything, right? So they must know something that we don't, right? Which is like that they value their time. They can make that money back. And so we need to find properties that cash flow even with property management. And that's what we do.
Yeah, I would honestly say, like, even like you alluded to on the time of why property management is important for a time. But something that I've noticed is like, hey, I might be in a long-term, in a rental style of investment, but someone who's doing an Airbnb, or even if you're in short-term or long-term, I would say turnover rates. Turnover rates is if you don't have a property manager.
Oh, this is such a good point.
Right?
Yeah.
So say, for example, I'm in a 1-year rental. Tenants are in a 1-year lease. After that, say December hits, looking for January. If I have a vacancy for January, February, March, if I'm out of town, I gotta come in, see what we can do to fill that, right? So if January, February goes by, I already lost more money than the property management fee it cost me anyways, right? So like,
well, it's because you're a logical person. I try to tell people that, and it's like they don't get it until it happens to them. Yeah. So I've had some clients where they're like, no, Steven, that's fine. It's okay. Yeah. And then next year they'll call me and they're like, oh man, I get it. And I'm like, let me guess. Your lease was going to expire and you forgot, and your tenant called you a month before they're supposed to leave, that they're leaving. Yeah, for sure. And now you're rushing to get the property on the market. It's going to take you 2 months to rent. So you're going to lose 2 months at $3,000 a month. You're going to lose $6,000, which is far more than what you would pay me to manage it. Sure. And they're like, yeah. And I'm like, exactly. So it's such a great point, because you see those are called, I think they're called, I forgot the name of it. It just escaped me. It's called like ghost fees. Right. Phantom costs. Sorry, that's the name. They're called phantom costs. Costs that exist that you're not aware of until they actually happen. Right. Yeah, for sure. And so the vacancy is the biggest lever. For us as a property management company, if we can mitigate your vacancy to less than 2%, then it saves you way more money than it costs you to keep us on board. And the way we do that, for those of you wondering, like, well, what's so special about you, Steven? How can you do it? It's very simple. And this is just a secret that you guys, if you're self-managing, can use, is just send a lease renewal notice to your tenants 3 months before their lease expires. My thought process is just, if it takes 2 months on average to rent your property, and I send it 3 months in advance, I give them 15 to 20 days to make a decision. Yeah. And if they're like, no, I don't want to renew my property, and we have certain incentives that we do to get them to renew. But if they say no, great, I have 2.5 months that I get to put the property on the market. The chances of me not being able to fill it within the average time it takes the market to fill it is very slim.
Right, of course.
So that's how we're able to just, for example, I have somebody moving out on the 15th. I have someone moving in on the 17th. So we're just turning it over, and I rented it 2 weeks ago. So my client already knows that when their tenant moves out, they have somebody coming in.
Of course.
And they're going to pay more money. So they're like, ultimately in my business and in anybody's business, we have to create enough value where the cost of us is like drowned out by the value that we create. You know, so that's kind of where we're at.
I would say, and people like, oh, that's why you're in Miami. I'm like, to be honest, when I go there, I don't even see my property. Like I don't see it. Like I know there's people that tell me, oh, do you have to go check in on them? Like how are the tenants doing? I'm like, I don't know. Like I really don't know. Like that's why I feel like, again, just rewinding with it, that property management is so important. Just gives you stress-free time, right?
Peace of mind, man. Yeah. Like I think the idea is if you have to check in on your properties and think about them, we're not doing our job.
Yeah.
Like you get a report once a month. Yeah. And then every now and then, I think like once every 5 months, we may talk about like a maintenance issue that goes above what we budgeted for. And I may need to ask you, like, but it's so rare. I think we did that once last year, you know? And so it's very little time investment, and it should be that way, you know? If not, then you can't go out and focus. I need you to focus on making more money so you can buy another property, right? Like that's what the goal is.
Yeah, absolutely. Like, talking about like just to rewind, like how you were able to help me. I can talk about my experience as an investor, and obviously you're being the property manager yourself. We had one turnover since the time that I got my property in end of 2023, and the first thought that came to my head was like, my goodness, what if like we don't get this film? And I'm sure that's a problem that a lot of investors have, right? Their occupancy and their vacancy time, right? So you spoke about it. You got out to the tenants months in advance, right? Before I even thought about it, the type of investments, and does it really differ? I don't think it really differs for me, if I would say my opinion. The types of properties that people should get into if they're investing away from themselves, right? We could talk about pre-construction. We could talk about Airbnbs. We could talk about short-term, long-term rentals. Do you think there's any difference in being away from things, or you think it's more so about the person's goals specifically?
It's about the person's goals for sure. What you want to accomplish as a real estate investor is going to, in a way, kind of line you up to the type of investments that you want to do. Right. Some people start with fix and flips, which are the most, I would say the least passive of all of them. They're a very active form of real estate investing. And then there's definitely way more passive. I think probably the most passive is like REITs, which are like basically investing in stocks. Very little to any thought process goes into them. And then the spectrum is kind of all the way in the middle. And so everyone's risk tolerance as an investor, everyone's involvement as an investor is going to change. Sometimes people reach out to me and they're like, hey man, I'm interested in fix and flips, or I'm interested in novations, or I'm interested in doing warehouses. And I'm like, I don't do any of that. No. So I don't even entertain the conversation, because I'm like, it's not what we specialize in. Right, and I would be doing you a disservice if I try to sell you that, you know? So we do Airbnb, and we do long-term rentals. So if you're within that ilk and that's what you want to be in, then we got you. No, man, I think we're good. I think that we pretty much spoke on a lot of the investing stuff. I know that hopefully for your audience watching this, they may have a ton of questions. Real estate investing is kind of, in a way, very vague. Right. It's a very vague term. Right. And so like understanding the specifics, especially if you're a new investor, could be overwhelming. But you know, you are a good resource now with explaining your journey. I think that the last thing I would say is this: the fact that you are as young as you are, undergoing your journey as a real estate investor, documenting that journey is such a wealth of knowledge for people, because most people will document their journey after they've made it. Success. Right. Yeah. And so then they're like kind of talking about the struggles, and then, you know, though it's an Instagram highlight reel. They don't really want to talk about the losses. They want to talk about the wins, but being able to see someone in real time do it is like kind of giving a successful company like a camera, being like, yo, how did Steve Jobs do it in the process of like doing it, you know? It's kind of it's commendable, bro. So I would just say, as long as you and your brother continue to invest and you continue to document, and you document the losses, and you like I would say my 2 cents is talk about some of the not so great things about being an investor, which there are.
Yeah,
like there's hair on every business. Some people try to find a business that's like, I need it to be perfect. I need to never think about it. I need to make money all the time. And there's like, it's never that. Yeah. So if you talk about like, hey, these are the great things I like about it. And then I also don't like about like having to think about a person leaving, even if Steven is taking care of it. I just don't really like to think about it. Yeah, I think that's super resourceful. Hopefully your viewers will see that. And if you do, I would think that you should leave your comments and questions, and then maybe we do a part 2. I don't know.
For sure.
Yeah.
I wanted to share the simplicity to my fellow Canadians that, hey, the dream of owning a property in Florida may sound so luxurious or glamorous, but it's a lot possible. It's very possible for a lot of people than what they may think. So like for me, I had so many doubts, so many questions, so many like anxieties about doing it for the first time. Obviously something I studied and went through, but I had so many anxieties about doing something so far away, something in a market that I wasn't familiar with, but it's a lot closer than you may think. And yeah, so
well, the number one thing you need to have before anything is money.
Yeah, for sure.
Like you had some money
for sure.
to put of a down payment. You could do it without money, bro, but it's so much more complicated. It's so much like I've had people call me, they're like, I want to buy real estate. I'm like, how much money do you have? $2,000. I'm like,
yeah, for sure.
It's not. It's very tough.
I was having a conversation with somebody the other day, like, and again, it was not to like toot my own horn by any means. I hate doing that. I hate even talking about my story. That's why I only made it public like a month ago.
Yeah.
I just don't like, I don't want to come off that way, right?
Yeah.
You talk about having money. Yeah, having money is important. That's why a lot of people, you see most investors are between the ages of 25.
Yeah,
30.
much older.
It's possible to do it, but you just need to do things that, whether it's setting your income, budgeting, looking at a credit score, like doing all those small things is going to lead you up to something like this, right? It's not just like snap my finger, hey, I want to buy this.
Delayed gratification, man.
Right?
You probably, I mean, I don't know your story leading up to the money that you saved, but I probably imagine, because similar to my story, when I saved a lot of money to buy my first real estate deal, and to some people, that's probably not a lot of money, but to me at the time, at my age, how old was I? Like 27 when I bought my first deal. It was like all the money I had in the world, right? And so I was like, I was very scared, but it's similar. I think we probably had the same story. It's like you had to say no to a lot of things you otherwise would want to say yes to, and just delay the gratification that you wanted to be the man that you want to be. Yeah, absolutely. Right. And it's so hard to do that because you want to just buy like that new car or that new PlayStation or whatever it is, or go on that trip. Right. But you got to say no. Yeah.
Like, I remember like before, like as soon as I told myself, like when I was 18, that I wanted to get into real estate, I was working 2 jobs. Like I would go from one from 8 to 5 or 7 to 5, and then another one from 5 to midnight, right? And then I was also doing that right after I finished my semester. I played college baseball for a semester. So I was doing so much. I was like, at the time, like 18, 19 years old, you want to go out, you go with your friends, whatever the case may be. I was like working, like I remember weeks, like I was working 75 hours of just hours alone, right? Delayed gratification is like, we can get into a whole nother topic about about doing things to achieve your goals, but starting that and dedicating your time is really what's going to get you in starting investing. Like this doesn't go to Canadians in general, this can go to anybody, right? It has a high cost of entry. Like it's not a secret, right? Anybody can go buy stock or buy a piece of crypto and get into it right away. Real estate has a high cost of entry, but it's one of those ones that can pay you up for the future.
Yeah, I don't know if your audience, I know we were saying we were going to wrap up like 20 minutes ago, but hopefully we'll say this last thing. I don't know if your audience is younger or older, but like if it is a younger audience, I think the first thing, if people are like, if they see this video and they're like, oh, okay, what's the first thing that I should be doing? It's exactly what you said. If you're not disciplined, if you don't have a budget, if you're not saving money, there's a great book that I always tell my team to read, which is The Richest Man in Babylon.
I'm gonna have to check that out.
Yeah, it's a book. Every time, like I have a real estate team as well of new agents that come in, and I kind of mentor them, and they're like, you know, they're all wide-eyed and bushy-tailed. They're like, let's go make money, and I'm like, yeah, okay. So when you make money, read this book, and it's gonna tell you what to do with it when you make it. Right. And I'm like, if you don't have the principles on making money first and then saving money and then investing money, you can't skip. You can't just be like, I want to invest money. Yeah. But you don't got money, right? Or you're bad with it. Yeah. So I think that invest in yourself first before you invest in real estate, because one thing I think you and I both know is that if you hit it right, you can set yourself up for life. Yeah, you can easily parlay this property into another 2 or 3 properties with the same money. and you're doing it the right way. But if you hit it wrong, it could be devastating.
Absolutely.
Like you could lose all your money.
Right.
And if you're young enough, you could probably recover.
Yeah.
But if you have a family like I do, you have kids,
Of course.
bro, it hits. Like
Yeah,
I did it before I was married, so that's probably the smartest way to do it. But if you're married and you have kids like I am now, I'm way more assessment of
Yeah, of
like
course.
taking less risk
Risk tolerance.
because the risk now no longer affects me.
Yeah.
It affects my family.
people
So
around you.
if you're single, that's an advantage,
Yeah, of course.
right? So use that advantage before you get kids and before you get married, right?
Right.
So,
Absolutely. Like, yeah, there's a lot more to get into if we wanted to get into talking about like the younger audience. I would say like being disciplined. You talked about it. Like I got that. I would say my parents are not wealthy by any means, but the one thing they did pass on, which was wealthy, was the knowledge that they gave me about saving money and the importance of investing your money.
amen.
Whatever they gave to me, they gave me knowledge at the end of the day, and that was able to sum me up. So I would say like to wrap it up.
Yeah, bro. Well, awesome, man. This was a great podcast. Hopefully people leave some comments, and if there's a part 2, let us know. I'll be happy to join it.
Absolutely appreciate it. Thank you.
All right, man. Signing off. See you guys later.